Good evening and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you live from India's startup capital, Bengaluru. And we kick off the show then with an interesting turf war that's brewing in the online payment space. We are talking about the war between the payment banks on the one hand and digital wallets on the other. Now, what is this issue on? It's basically on interoperability of wallets, a move that the Reserve Bank of India had announced over 6 months back. What does this technically mean? It means that currently digital wallets are not interoperable. So if you want to send and receive money from a wallet, it has to be from one Paytm account to another Paytm account, one MobiKwik account to another MobiKwik account and so on. But if the RBI allows interoperability, you can send and receive money across digital wallets irrespective of which wallet you own. So I can send money from a Paytm to a MobiKwik. A MobiKwik person can perhaps send it to an Oxygen. A person who has an Oxygen wallet can send it to a FreeCharge and so on. But this has hit an unexpected hurdle at the doorstep of the Reserve Bank of India, because the Economic Times reports that payment banks are not too happy about this move because they fear that it will give digital wallets too much of power without any regulatory oversight. Remember, payment banks are subject to more regulatory oversight. They also have more limits when it comes to minimum capital that they are supposed to maintain as opposed to digital wallets. So as per this ET report, the payment banks that are allegedly not on board with this move are the ones promoted by the telecom operators. So that includes the likes of Airtel Payments Bank, Idea Payments Bank, as well as Jio Payments Bank, which remember was going to be set up through a joint venture with the State Bank of India. They are not happy because they believe that it gives too many advantages to the wallets without much responsibility and accountability. So the RBI is now in a fix trying to sort out this issue, and perhaps that's the reason why we haven't seen any traction on this front, despite the fact that it's been over 6 months since RBI first proposed interoperability. This is our big story on Startup Central. And remember, payment banks have been controversial right from the word go. RBI issued payment bank licenses to 8 or 9 players last year, but 2 or 3 already opted out and surrendered their license. That includes the likes of Tech Mahindra. It includes also a joint venture that was supposed to be set up by Dilip Shangvi and another. After that, you also had UIDAI cracking down on Airtel Payments Bank for opening accounts without consent. And recently, the RBI said that Paytm and Fino cannot accept new accounts. So to really understand what this all means, what implications it will have, we're joined by a couple of experts voices on the show. We're going to go across to Sanjay Jain first, who understands all that's there to understand as far as the online payment space, digital wallets are concerned. Sanjay, thank you for joining us on Startup Central. What do you make of this move? Do you have a view on interoperability between wallets? Should it be allowed? Or is it giving digital wallets an unfair playing ground like what the payment banks seem to suggest?
So, Chandra, the whole idea of interoperability is that, I have some money somewhere in an account, whether it's a wallet or a bank, and I want to make a payment with it because I want to make a purchase, or it's a remittance, I'm sending it to somebody, and I should be able to do it irrespective of where they hold their money. And so interoperability really means that, it is freedom for the consumer. And it, prevents them from being tied down to one provider. And so interoperability, in our view, is in general a good thing. It also means that because a customer of one bank or wallet can deal with a customer of another bank or wallet, it just increases the market for everybody. So when one particular entity brings in more consumers, they bring in more people for everybody to transact with. And that's really been the value of all of these payment systems, including UPI, that they just make it, when one particular company acquires a customer, they're acquired for everybody to transact with. So in our view, payment interoperability is a good thing. It reduces the cost of doing business. It makes it easier for consumers. And so I just don't have any view on how it changes the business model for payment banks, etc. I mean, that's something which I don't really have much of a view on. But overall, that's our view. It's a good thing.
Right. Let me also bring in Arnav Gupta from Forrester. Arnav, what do you make of these concerns? Payment banks, it was touted as a very bold move to, increase financial inclusion, but it's sort of been in a spot of bother right from the beginning. You've had, players surrender licenses. There was a crackdown on Airtel Payments Bank, and you've also seen Paytm Payments Bank, Fino Payments Bank facing the heat in recent weeks because of lack of consent when it comes to onboarding new users. So, are the concerns of payment banks justified when it comes to interoperability that digital wallets have now been seeking?
If we have to look at the regulatory arbitrage that mobile wallets would have from this move, when compared to payments banks, of course, it sounds a bit unfair for the payments bank. But having said that, I think payments bank have had a head start than mobile wallets, right? And mobile wallets did lose their, relevance in the industry, in the overall value chain because of UPI first being available to banks, and then tech giants like Facebook and Google entering the market with all the cashbacks and everything, right? So, of course, yes, it's going to hamper their business model. Yes, it will definitely, in a way, reduce the customers that are using payments bank for making a P2P transfer. Because customers are more familiar with mobile wallets. The overall user experience, the experience of making those transactions is much more familiar and easy on a mobile wallet. But having said that, I think it's the broader or a very high level strategy is to increase the financial inclusion, and this is what RBI is trying to do. So they let payments bank do this. Now they are letting mobile wallets enter the value chain and increase the financial inclusion, get more and more customers on board on digital payments and on digital financial products like micro lending, micro insurance.
Right. Sanjay, coming on that, as Arnav said, digital wallets have already been under pressure ever since UPI launched because the value proposition of digital wallets came down. Subsequently, they sort of took to UPI. So pretty much every wallet has a UPI offering today. Now, interoperability would have been the next step to retain some of that edge, to still make digital wallets relevant. But if interoperability doesn't come through, if, the RBI yields to pressure from the payments bank, what could this potentially mean for digital wallets as we know them today?
I'm not sure if what would happen if RBI doesn't make this change, because till today the wallets are not interoperable, right? So they've been dealing with it by making it easier for users to transact, by making more tie-ups with other businesses where their wallets can be used, and so they've been actually out acquiring customers on both sides, and so they will continue to do that. They'll continue to fight the best that they can. And in some senses, if that makes the user experience even better, then that's what they will try to do. Now, on the other hand, if you think of payment banks, because they're also forced to do business through making payments easier to use, and they will also continue on the same path. And so it will turn out to be, who does better for the customer at the end of the day. I don't think the interoperability one way or the other is going to change that story that much. From the business competitive advantage perspective. From the user convenience perspective, it of course changes it quite a bit because users will find it easier to transact. So when I transact with the shopkeeper, I don't need to know where he holds his account and where I hold my account. They don't need to be the same thing.
Right, right. Arnav, final question really before we let you go. Just want to understand, the objective with which Payments Bank was started to what we are seeing today. Is there much left to be desired in terms of how this has gone about from a regulatory perspective? Do they really hold a unique selling proposition that's not already available when it comes to financial inclusion? Because one could argue that, you have the Jan Dhan accounts for that. So what are payment banks doing differently? You also have UPI, you also have digital wallets. So, comment on that.
Yeah. Well, first of all, of course, as you rightly pointed out, that for financial inclusion, we have those Jan Dhan accounts. But to be honest, I'm not sure how many people are using those Jan Dhan accounts, right? And that's precisely why payments banks were set up, that they just don't restrict themselves to, say, a normal savings account, but they also have to sell some other financial products. They enable people to come on board, basically get on board to the financial ecosystem and start transacting, as well as maybe purchase and insurance or something like that. But, having said that, I really don't see that Payments Bank have created a lot of value till date. I mean, one or two examples maybe, but apart from that, I don't think they have been so much impactful. And this is what, some of my potential clients have been discussing with me, that, what do you think, that Payments Bank, are they a threat to someone like an SBI or maybe an HDFC or any other traditional bank? And my answer is usually no, it's not a threat.
Right. Sanjay, your closing thoughts in terms of, where payment banks will be. Is the value proposition for a payment bank still intact today compared to when it was conceived, say, last year or the year before that?
So I haven't spent as much time thinking about the business model for payment banks, but my view is, for any business, you've got to take the regulatory landscape and, the competitive landscape both, and figure out how to position yourself best within that landscape, create value for yourself and service customers. And these landscapes will shift over time. The world is moving very rapidly. And so it's up to these businesses to try and figure out how to compete in this environment. And I think, the fundamentals of that continue to stay the same. So as Arnav just said, they need to go figure out how they're going to best acquire customers and deliver value for them. And that's the challenge that's been in front of them right from day one, and it continues to be so.
Right. On that note, Sanjay and Anna, thank you so much for joining us on this special discussion on Startup Central. We have to see what the RBI finally decides. Will they yield into pressure from the payment bank lobby, or will they go ahead and allow interoperability of wallets? That's something that we have to wait and see. But on that note, thank you both so much for joining us on this edition of Startup Central. Time to step into a short break, but before we go into that, time to bring you some news that's just come in a while back from Tesla. Now remember, Elon Musk has been in the news in the last week on talks of taking Tesla private. It seems like that is moved forward because he now says that a Saudi fund has offered to pick up a stake in Tesla, and he says that in the last 2 years the Saudi Arabian Sovereign Wealth Fund has approached him multiple times about taking Tesla private. Tesla's Musk also says that most of the capital required for going private will be funded by equity rather than debt, and he also says that reports that more than $70 billion would be needed to take Tesla private dramatically overstate the actual capital raise needed. So those are some of the updates. Remember, this news actually started out as a tweet out of the blue from Elon Musk's handle last week. A lot of people wondered if he was serious or he was joking, but it's clearly moved forward, and he's found a big backer in Saudi's sovereign wealth fund. So I think they are moving towards that investment from the wealth fund as well as taking Tesla private. But on that note, time for a break on Startup Central. When we come back, we tell you about RentoMojo's new offer where you can rent an iPhone X. More on that on the other side of this break. Welcome back to ET Now Startup Central. Now, eBay India will shut its portal tomorrow. Now, remember, this comes after the Flipkart Walmart deal, as a result of which eBay exited its investment in Flipkart. It originally invested in Flipkart over a year back to kick off cross-border sales. But with the partnership between Flipkart and eBay coming to an end, what does this mean for eBay India? Will they relaunch operations in a different form? Rahul joins us with more details. Rahul.
Well, it's a mere formality in that sort, the fact that Flipkart will be winding down the eBay website here in India. Because to give you some context, remember Flipkart had bought the eBay India operations after eBay invested in it about $500 million. But come to the Flipkart Walmart deal that took place a few months back, eBay decided to exit from its investment. So all the agreements that stand with Flipkart were nullified, by which means eBay made a blockbuster $1.1 billion of the 500 million that it had pumped into Flipkart. So after having exited Flipkart, eBay had made it clear that they would want to relaunch here in India a differentiated offering that will sell goods in the cross-border category really. And Flipkart has also made it clear that after shutting this down, they will be launching a new website for refurbished goods as it is. So it's just a formality that eBay India is shutting down, but what a journey they have had here in India, because they came in here in 2004. They invested in Snapdeal, wrote off that investment, then invested in Flipkart, have exited it. We'll have to wait and see how eBay 2.0 or rather 3.0 will turn out here in India. But for now, the experience as far as eBay India will end starting tomorrow.
Thanks for that, Rahul. I'm afraid eBay has not had a very good run in India. Will that change now with its relaunch? That's something that we have to wait and see. But remember, it's been under pressure in its home market in the US as well. So we really don't know what it's going to do in India, what the focus is going to be. But time to end the show with an interview of a startup that now allows you to rent everything from iPhones to Samsung phones to other kind of phones. We're talking about RentoMojo, which originally started by renting out furniture to home appliances to bikes. They've now expanded that category to expensive iPhones that one would otherwise think twice about buying. Rahul caught up with the founder of RentoMojo to really understand the reason behind this new offering, how it's going to work. Let's listen in.
What we have been seeing in the launch of mobiles was just an extension, and it will unfold the story further. We don't see ourselves as more as an e-commerce platform, but rather a lease financing platform. Once we started having that mindset, it was just an extension in the product class. We were providing lease financing in furniture. We started providing lease financing in appliances and then bikes, and now it's a natural extension to mobiles. What we are seeing in the market is, with newer technologies coming in, with Samsung, Apple, and most of these brands are launching newer versions of their handsets every year, right? So, because of which the frequency of change of a mobile handset, from a consumer standpoint, has drastically reduced. Consumers used to change their handsets every 2 years. Now, 55% of the urban population is actually changing it every 6 months.
Mm-hmm.
So that's because of which we kind of launched this service. That what if there's a service that lets you lease a phone for 18 months or 12 months period, which is your typical cycle to change the product, right? And then you can swap to a better version or upgrade to a better version altogether. So that's the service all about. With a minor twist that they can lease out a phone for 18 months, and just in case if they're not liking it, there should be a flexibility involved, or the service should be giving them the flexibility to return the product also whenever they want.
No, that's something that you also let
That's
them
the service that we provide.
Viewers would want to know, like a high-end iPhone X that you sort of spoke about, 4,999. Other Samsung phones. Could you talk to us about some price points for us to understand if it sort of makes an economic sense also to rent out?
Just take this iPhone X. It's at a 4,999 for for a good 12-month period. So you eventually, for 12 to 18 months, you end up paying only about 50 to 60,000 rupees, vis-a-vis a product which is standing at 90,000 rupees. So if you return the product, you will eventually save 30 to 40,000 rupees, right? But if you want to buy the product, we take a marginal lump sum of around 40 to 50,000 rupees, and you will be able to own the product. So most of the buying mechanisms everywhere, people ask you to commit for the product then and there. If you're buying it outright, then you have to, of course, pay the entire lump sum and commit then and there. Even with EMI, it's a commitment then and there. So for 12 months or 18 months that you're signing up for, you can't retract and get out of the contract whenever you want. Although this service lets you do that.
Consumers who are actually on RentoMojo, what are they after? I believe furniture would still be maximum in terms of...
in fact, appliances is the biggest for us. Appliances is the biggest for us.
Talk to us about some consumer trends in terms of, what people are preferring.
So, of course, we launched appliances because consumers wanted us to launch it. When we were giving furniture, they said, if you're giving me a bed, sofa and a mattress, why not a TV, fridge, washing machine as well? Because I'm getting into the same house. The dynamics that works for furniture and appliances is very different from, what will work for a mobile or what will work for a bike. Furniture and appliances are governed by people committing to buy furniture and appliances and then dealing with the hassles of relocation or resell and so on and so forth, which is where in a solution like furniture and appliances leasing, they get the option of free maintenance and free relocation from our side. So, a potential 1 BHK relocation itself costs around 10 to 15,000 rupees today. So that's the kind of a savings with respect to, let's say, vis-a-vis furniture and appliances. Again, the same dynamics work. We are cheaper, in terms of monthly installments there. They still get to try the product for a certain time period and then own it. With bikes, what we realized was, when we were, taking a deep dive into the consumer, insights, we realized that people were spending 5,000 rupees on an average monthly in terms of their daily commutes. That is going from one point A to point B. We realized, can we offer them a, substitute to their daily commute? So that's when we launched an Activa or a Honda Navi or something like that. That is coming at 2,300 rupees a month, inclusive of all the repair, all the insurance and maintenance built in. So you can imagine at 2,300, you have the freedom of your own transport and you can just go from office to home.
Interesting.
But as I said, the dynamics are different, and that's why, with mobiles, is the changing behavior of consumers rotating or upgrading their phones regularly. They'll come into the effect, and that'll make the leasing option popular.
With mobile phones coming into play, are you sort of expecting a lot more in terms of, users also that you would add to the platform?
Yes, definitely. The business has been thankfully growing, over and above 100% year on year since the time we started off. And that's the good optimum, growth rate that we think a financing or a lending company should grow with. With mobiles, definitely we can see a huge uptake. That's the most heavily surged. Just the component of retail itself is fairly huge.
On that note, we come to the end of yet another episode of ET Now Startup Central. Hope you loved the show. Thank you so much for watching and stay tuned to the channel for more news and updates.